Greetings everyone, it's Michael Anastasiadis here, mortgage advisor from Bosanoff Mortgages, Mortgages Made Easy, coming to you live with the special OCR and monetary policy update. So you would have all heard by now that today the Reserve Bank Monetary Policy Committee cut the OCR, the official cash rate, by 0.5 basis points to 4.25. So that was as expected. We were hoping it would be a 0.75 just over a month ago, but all the data that kept coming out started to suggest that it would be a 0.5 cut. And here we are, new official cash rate, 4.25%. So I've already seen immediately that from tomorrow, all the big banks are reducing their floating rates, their revolving credit rates, their offset accounts. All those sort of variable facilities are going to be cut tomorrow. So you'll see that tomorrow. What is not clear yet is when the banks are going to cut their fixed rates. Now we did see earlier this week BNZ cut their 6-month rate to 5.99. We haven't seen any other banks move on that rate because they're all above 6%, or on any of the other fixed rates. So we're just waiting to see now. I think it might be Friday afternoon at the earliest, otherwise mid to early next week. So look, we'll come to you live once we know what's happening there. I'll always share it. Now look, I did stay on the after the OCR announcement between 3 and 4 today. The Reserve Bank had a press conference, and I just thought I'd share with you some of the notes I took. Now it sounds like that next year, by the end of next year, the OCR will be somewhere around 3.5%. And when we were looking at the data that they gave us, and this is where it gets a little bit confusing, because the data suggests that they're going to have 0.25 cuts until we get to an OCR rate of 3.5. But it sounded like the governor and the board there, the Monetary Policy Committee, are sounding like there might be another 0.5 cut on the 19th of February. So who knows what's going on there, because then that would take the OCR down to 3.85. 3.75 I should say, leaving only one more cut of 0.25 to get it to that 3.5. But they may only do smaller cuts to the OCR next year. Anyway, we don't know, but it looks like by the end of next year, it'll be around 3.5% the OCR. What else did they say? Oh, that's one thing I should also say. I also noticed that the bank's going to cut their variable rates. One of the big banks has also said that they're going to cut their stress test rate from just over 8% to 7.6%. So that's going to become effective on Monday. So I expect the other banks to also do something similar. So that's good news for those that will be putting through a mortgage application worried about the stress test rates. The other thing I noticed from the Reserve Bank conference today, they made a note that unemployment, they've revised their figures, so it's not going to be as high as what they were expecting throughout 2025, so that's good. I do think though we've got to put an asterisk around that, because Wellington's a little bit different with the public service in there. They also said that they're picking house prices to grow annually around 7% here on in. So 25, 26, and of course this will all be revised, but as it stands today, that's where they're at. And the other thing that I noticed that they hinted on is that they also said that the banks at the moment, their margins are quite high. So that's how they make their money. So what they sell the 1-year rate to us at, did say 5.79, they're saying that there's quite a bit of a margin there for what they're buying it for. And yes, they do want the banks to be profitable. They do want the banks to be well capitalized so they can handle any shocks. But the governor said that there's margin there to cut costs now if they wanted to. So that's interesting to hear him talk like that. So the big thing is now, when are the banks going to cut their fixed rates? I don't have an answer to that. I think the earliest could be Friday afternoon. Otherwise, it'll be sometime early next week. But as soon as I've got that, I'll share that for you. And the last thing that the Reserve Bank Governor said, and I think it was a good point to end on, and I'm going to end on this point as well. If we want New Zealand to be more productive and have a bigger slice of the pie, spend your money where you raise productivity of New Zealanders. So that's key, guys. Spend local, and that's what we're offering our service, because if you come to us, you're helping our company, our staff, wasn't off mortgages made easy. Anyway, guys, I'm going to sign off. That's the update, and I'll be live as soon as I know what's going on with the fixed rates. In the meantime, just stick patient, and I'll give you that update as soon as we have it. Great to see you all. Thank you, and I hope it's bright and sunny wherever you are, like it is here in Wellington.